Good morning, everybody. Welcome to another episode of Wise Tech for Wise Money, the podcast where we speak with founders, investors, and operators who are actively building businesses, moving capital, and creating opportunity. I'm Gary Wayne, the founder of A1 Solutions International. We work with international leadership, teams, financial services, businesses to improve efficiency, scale, intelligently and grow through smarter strategy and practical AI-driven systems. Today's episode is titled The Missing Infrastructure in Real Estate, Trusted Data, Finance-Ready Assets, and the Road to Digital Markets. Real estate is one of the largest asset classes globally, but compared to financial markets, it still runs on fragmented, inconsistent and often hard to verify information. Today I'm joined by Matthew Schneider, founder of Building Inc. Matthew, it's great to have you here. Maybe you could tell us a little bit more about Building Inc. How you got to develop a business and a platform, and what you do, what solutions you provide.
Certainly. And Gary, thank you so much for having me on your show this morning, or I think it's afternoon.
It's afternoon for me, morning for you, I believe.
Yes, that's right. I'm East Coast US. It sort of looks like New York is in my background here, but it is a fake background. Our company is out of New York City, which of course is the best place for real estate. Lots of prime activity there. Although with the changing political structure, we'll see if that keeps up. Nonetheless, my journey into real estate started about, I'd say 6 years ago. I was getting into technology, entrepreneurship, and real estate at the same time. This was pre-COVID, but it was at the cusp of COVID. We were looking at the first cases coming out just about when I was working on a marketplace to help people invest into real estate deals. Our objective, myself and my co-founder, was to bring down the minimum entry or ticket size to get into these real estate deals. And the reason why the timing was very interesting was because as people went into lockdown, they had to resort to alternative methods for finding real estate deals as opposed to going in person, meeting folks, going to networking events. And so this marketplace idea was pretty interesting. But ultimately it failed. However, that laid the foundation for everything that I know today and all the problems that I recognized in underwriting and diligence, the digital requirements and transformation that real estate has to undergo for online marketplaces or online investment or real-time oversight or even AI tools to be successful. So after we sunsetted the company, parted, he went back to investing in real estate, I decided to double down on digital real estate and figure out if this transformation is going to happen. And it's a big one. It's a demanding one because the built environment is very tangible and it's quite stubborn. It does not like to change. If it works, right? Don't try to fix what's already doing well. But the times are changing, certainly. And money is modernizing, which means that asset classes like real estate and how we think about data around them, how we calculate the numbers, how we invest, or how we expect communication or or performance to be reported, that's changing as well. That has to modernize. So I looked into this deeply and I realized common denominator, real estate has a data problem. There has to be some better way to collect it routinely in perpetuity. Like let's have almost like a river, a flow of data from what's happening on site or in a property or in the back office to platforms, to stakeholders, to calculations like valuations and waterfalls, as well as maybe reports like sustainability, environmental impact, whatever it might be. That's what I worked on. That's what we established. That's what Building does. A better way to capture, to contextualize data, to understand why it exists, under what circumstances it was created or handled, by who, if it's changed at all. And then we help deliver that to dashboards, to AI tools, to valuation software, whatever it might be. But we're really the data and trust infrastructure that real estate needs to be successful in a digital era and certainly in online capital markets. You mentioned financial markets.
Yeah.
We might call them internet capital markets.
So tell me about the data, because I've talked to a few people in property over the last few months, from appraisers to investors to builders to everything. And one thing that came out was that the city records hold a lot of data, but very often they're very wrong. So, you're setting up Building Inc., or you've set up Building Inc., you're supplying data. How do you verify and collect the data?
Well, first I should clarify two things. That we are stewards of the data. We're not a big database. We're not consuming data for our own purposes. And the data is all private market data. So it's stuff that is usually not available. It's out of reach. It's not going to be found in a public record somewhere. Public records, registries, they might identify the entity that owns the real estate. They could have a title or deed attached, maybe recent appraisal value, but that's very high level. It's very surface level. We're looking at items that will inform appraisal, due diligence, insurance, investor reporting, actual performance and health of the underlying asset. And that data is very difficult to access traditionally because it could be in paper format or locked in someone's computer offline, or maybe it's online in a repository that we don't have access to. And if you were to export, I don't really understand it. I don't know if I can trust it. I don't know how long it's been sitting there or what condition it's in. So ultimately what we're doing is we're trying to first connect a bunch of disparate systems, fix the fragmentation that exists in real estate data. We don't want communication being on WhatsApp and Telegram plus email. Then you have versioning issues. Some information might not be captured at all, or we don't know if it's been modified when it was transferred between different stakeholders, if it's stale. There's a lot of question marks. And so we help to orchestrate that, connect the systems, and then provide oversight or governance to say, this is the document at a given time. We're going to require that someone credentials it. And we have a very unique way of doing that where we can actually cryptographically or immutably prove that the document as it was and the person who signed off on it have not changed. Or if they have changed, will be identified. If even one pixel in that PDF, or if even one cell in an Excel sheet changes, it gets a brand new digital fingerprint. It needs to be signed off again. And what this does is it adds this provenance first to the data. Where did it come from? How has it changed over time? And where is it at now? As well as immutable trust. Not just the concept that you can move data, but that you can carry trust between people who don't know each other, firms that haven't worked together, or software that hasn't been connected before. So connect the data, make the data portable, but also make the trust portable. Then when it shows up in an Excel sheet, a valuation model, appraisal, some sort of calculation, we can do a couple things. One, we don't have to question the integrity of the numbers immediately. We can see it came from a document that's been scrutinized, has been credentialed, and if it were modified, we would be informed right away. But we can also audit that. So if we needed to inspect that further, because we're not guaranteeing that the underlying data is good. If there were collusion and the data were bad, someone signed off on it, or they were just overlooking it, we're not responsible for that. Again, we're just stewards. However, we will help you audit that, because then you click on a number, you say, show me the source document. I'm an auditor, I'm a regulator, I'm an appraiser. I need to inspect this further. I can then go back to the original document and see who was responsible for handling it, for producing it, what system created it, if any modifications were made. And I can say, I understand now where this number came from or what went wrong at a given time. And in large contexts like litigation, this is critical, because during the discovery process, you have to produce documents. And if you can say, here's our information, hasn't been tampered with, we can cryptographically prove that with institutional grade or court grade process, which is what we enable, that trust, no modification, without a shadow of a doubt. And then people say, okay, we understand exactly what happened on the project, what information was captured at a given time, what work was done, who was there. And so it just adds this unprecedented level of transparency to real estate deals. And it enables huge opportunities like cross-border investments. Typically, real estate is very regional. It's very localized because it's relationship-based. You work with parties you know you can trust. But if you take out that trust building exercise from the equation, because we can see the information, we can see how it was generated, and if it's been changed, now I can just invest in the deal if I like it. It's like looking at Apple stock. When we see Apple is on the move or Tesla, we just look at the price, we determine if we like that, if earnings are good, and you invest. You don't question the integrity of the data. You don't go to the auditor and say, let me double check what you've done, government. Let me inspect that further. You just say, I like it. It's a good deal. I'm in.
When you moved on from the marketplace, what was it in the marketplace that made you realise this was a service that was needed? Who did you identify? And I know there could be an array of companies and people, but how did you identify, or who did you identify to be the people that would need it the most?
Mm-hmm. Well, our ideal customer profile never changed. It was real estate developers and asset managers. So it is the same now because they are the conductor of the orchestra. They oversee everything, all the documents, all the people. What I realized, though, is that all of these projects that wanted to be financed were not finance ready. And even if they could do that for a snapshot in time, prepare all their documents, raise capital, they could not do that in perpetuity. So within 2 months, they were out of date. They had no process to update that. And then in order to participate in digital markets where people are looking at price, they're trying to understand risk in real time and what's going on with the underlying. That means you have to be constantly updating data and information, which can be burdensome. So there has to be some way to be able to update all that data in a streamlined manner, push that to downstream services, and do that over and over again without it becoming this big administrative burden. And that is in large part the code that we cracked, that we could help these real estate developers, asset managers, or even fund administrators become more finance ready, have a portfolio that's attractive and ready to trade 24/7, and it's not a huge burden in doing so. And a big technology that's contributed to that is artificial intelligence, because it can help sort and organize documents. It can interpret documents and pull out key data artifacts. So this date, this party, this encumbrance, this number, and it will extract those and automatically put those into the right places in a dashboard, in an Excel sheet or workbook. And that's really what slows down a lot of deals, is all of that manual data collection and entry. And then once that receives to the other party, or is received by the other party, they then do their diligence or verification again. They receive the data, they need to inspect it because they're not sure. That gets handed off to another party, the whole process repeats. So by making data easy to move, that solves one portion of the problem. And then by making data trustworthy upon arrival, that also solves another problem, which is the constant re-verification. And so having dealt with real estate deals, with real estate syndication, and done all this research in the market over the years, we realized that's what needed to be solved. Public markets have a solution. It's the reporting system. It's Edgar. You have all these parties and authorities. Private markets don't have that. So we're always rebuilding data, reestablishing trust. Let's fix that. The deals will be much more confident and they'll move much faster.
How much time does it save in the actual legal process? If I'm an investor or a developer, I'm looking at some land, or I'm looking at conversion, and I find a property, and I use obviously your data services. Obviously, I've still got to get an appraiser down there at some point.
Mm-hmm.
But will it actually speed up the process? Obviously, because you've got the data to give to the appraiser, so everybody's on the same page before they actually do the physical side.
Yes. So there's significant time and cost savings across many different stakeholders. The appraiser is a fantastic use case because they show up every 1 or 2 years, which is really not often enough for an official mark on real estate for it to be traded. You might want something more monthly. And so what we've seen in the markets, because there's a lot of different companies experimenting with this, and we've been engaging portfolios as well, is that you can actually appraise an asset or a portfolio at 5% of the time and cost if the data arrives structured and pre-verified, so that they can just look over what they have to, what's changed, and then add value in the way that JLL, CBRE, or Cushman & Wakefield might typically do so, run their analysis. Or if it's a fund, send that to Apex Fund Administration, and then they add their value. But in each instance, it's essentially being handed to the party as a present with a bow tie, with a bow on top. And so the amount of time you can save in data collection and reconciliation and verification is substantial. Other parties, if we are talking preparing for a fundraise or sending information packets to a broker-dealer, to a trading system, or to a new buyer, again, it arrives very prepared, exactly the way that you would like it. All the files are there. We can identify if anything is missing. AI tells us what's been modified. We can also click on the credentials of each people and understand what their role is and what they did over time. And it really just expedites the entire process. And in fact, we've not only seen that it removes a lot of line items in terms of expenses, but it can bolster the top line of an asset because it makes it more valuable. It becomes data rich. We know exactly what's been done. We understand the context. We can make better decisions if we become the new owner of this asset rather than assuming or absorbing all sorts of risk and uncertainty. So not only could that remove discounts from the market, but it could add premiums. And so that's very interesting that it's narrowing the spread between the bid and the ask and actually making the market value of that asset greater. And we've also identified that we could carry markets at fair or carry assets at fair market value rather than you put it on your books and you do purchase price minus accumulated depreciation, which is just guesswork over time, and then you have reserves and whatnot. So you can carry the asset for what it's worth because the data is being reported, which leads to regulatory capital release or reclassification. It's just very valuable all in all. Time savings, certainly, but in what you can do with the money afterwards as well.
Tell me how it's looked upon from the actual financiers, the banks, the people that are lending and supporting the deals. Obviously, if you present them with a prepackaged situation with all this data, it must make their decision making a lot easier.
It certainly does. And that means that they can offer a more attractive cost of capital in some instances to a borrower because the data is prepared, but they also know that there's new digital infrastructure in place to provide maybe real-time covenant monitoring or real-time performance of the underlying asset. Or perhaps the capital stack has even been tokenized, which is a recent trend where instruments, financial instruments, equity, debt, are going to be moved on a blockchain. And so what would happen is if I identify that there's increasing risks on this underlying asset or non-compliance, and we need to protect against that, we need to mitigate. Maybe we'll do a portfolio rebalancing or sell a pinch of our ownership. Now, financial institutions or non-financial or even retail can make a programmable action against that. So if exposure increases by this much, let's go ahead and reduce our position a little bit. But that's only enabled when you have the digital infrastructure. But it's very attractive, and it actually brings in more capital to these deals because it offers potential liquidity, which mitigates risk. Usually there's a premium for illiquidity, which means you can't get out, and if things go wrong, you're stuck with the sinking ship. Now this says there could be an exit for you, and so investors, lenders are more interested in participating in that deal, knowing that there's avenues out of that. So yeah, certainly. And there's another concept that is trending right now. Larry Fink from BlackRock is talking about it, as well as the institutions. Or if you've heard Donald Trump talking about Bitcoin and whatnot, there's this concept of decentralized finance, which is blockchain-based finance. And going back to the cost of capital, this is where we're seeing it actually compete with traditional major banks or even private credit and private lending, where now in a sort of decentralized fashion, people are able to borrow at much, much lower interest rates. But in order to participate in that digital market, again, you need that digital infrastructure on your property in place to be able to provide all that reporting, that real-time information, so that we can make quick collateralization decisions or maybe hedge, whatever it might be.
Explain to me how that works for decentralized finance. Look, I understand crypto and Bitcoin and everything, but probably the US is probably a bit further advanced than us. How do you actually raise capital using the decentralized market?
Right. So there's a couple different ways to use or leverage DeFi. You could use it for a primary raise. I need funds for a project. You could also use it as a secondary market. There's marketplaces, there's exchanges, trading systems, and people are able to transact. What is interesting about it, what's unique about it, is because it is on a decentralized ledger, a blockchain, the way that trust is established is quite different than traditional markets. Traditional markets, we have many different intermediaries because everyone is holding their own books. They have their own books, they record everything independently, you hand it off. If reconciliation needs to be performed, then that is done. On a blockchain, it's a shared ledger. It's not in control of one party. Everyone's looking at the same transaction, the same numbers, and that means that if we perform a transaction, we don't need to hold and clear it, because we're making sure that it's legitimate, that the funds existed, that it's a real transaction and whatnot. It can just be performed. You don't need many different intermediaries helping out with custody or settlement. You can just transact. And so that's really valuable if we were trying to maybe raise capital and you just wanted to inspect a deal and then move capital into the deal, or if you're looking at potential exits via maybe like a secondary markets and accessing liquidity that way, where you don't need as many intermediaries. So that's the attraction of DeFi, is that you could reduce intermediaries, which means that you're reducing the cuts that they would be taking from that transaction, which restores value to the original stakeholders, ultimately. Now, it doesn't have to be done that way. You could take these same principles of digitization and do it in traditional markets. It doesn't have to be decentralized. That's just what captures people's imagination, though, that could be faster and with fewer fees along the way.
Excuse my ignorance, but does that mean you're going to be buying the asset in cryptocurrency?
Not necessarily. So there's cryptocurrency, or even crypto, which is derived from cryptography, is a wide umbrella. I do speak on cryptography first and foremost because it's just math. It's 0 and 1s at the end of the days, and I'm a big advocate for it. But I'm not a big advocate for cryptocurrency, interestingly enough. I like Bitcoin. I think it's a store of value, like anything, like gold, or the US dollar, perchance. But the alternative coins or currencies that have arisen, I'm not bullish on them. I'm not a believer in them. I think 90% of them are rubbish. They just exist for extracting value from people who are willing to buy them. For some of the projects that are legitimate, the projects might be legitimate, but some sort of coin associated with that it's not going to go up. Really, people would rather invest in the company itself rather than some sort of cryptocurrency associated with that company, because compared to public markets where there's standardized earnings and whatnot, cryptocurrencies are not immediately correlated to the performance of the underlying company. So now, of course, public markets are like that too. We could all jump into Apple or whatnot, but there's a lot of fundamental analysis that goes into that. Then there's technical analysis, and there's still quarterly earnings and whatnot. Crypto doesn't have that. Crypto is just, it does what it wants to do. So that's not a realistic market, in my opinion. It does whatever it wants, whatever people are feeling at that immediate time. That's a very hard investment to try to sell. So Bitcoin, solid. It's politically neutral for the most part. New store of value. What we haven't talked about are stable coins. So digital currencies that use blockchains to move for fast settlements, for transparency. They are backed, though, by fiat currency, or in some instances, treasuries. And I do think that there's a big future with these, which would help with DeFi, as you were saying. Could we transact with crypto? Maybe,
volatile,
but not in the traditional sense.
Are they?
They're not volatile.
They're more volatile
exactly.
than the currency.
Right. They're the opposite. They're stable. And that's why they're called stable coins, because they hold the exact value of the asset that's backing them. And so I do think that there's a big opportunity in producing these stable coins. There's companies like Circle that have USDC. There's also stable coins like Tether. But then there's like the e-Hong Kong dollar, or new currencies being created for literally every single country. I couldn't name every single currency, but you could imagine that there's a digital equivalent that is based on a blockchain, so that you could interact with decentralized finance for the purpose of fast settlement, for transparency, everything that I mentioned before, where you don't need a bunch of intermediaries along the way that are checking that everything is okay and then taking their share for checking. It's redundant if we're working on a shared ledger.
Yeah, no, I see that. So talk me through a transaction using DeFi as opposed to fiat, to show just roughly, to give me an idea of the process, so I can see how it compares with traditional processes.
Mm-hmm. Well, I think a really good platform is going to make it nearly the same as a traditional investments or payments method. The only difference is the introduction of a wallet. This is unique. Now, it's not much different than a wallet that you have in your pocket. The idea, you have cash in a tangible wallet and some cards and some assets, and you could put a photograph in there or whatnot. A crypto wallet or a digital wallet functions the same way. Now, what's unique about it is that it has like a passphrase that you use to access it. You hold on to that, you memorize that, and then you have access to the assets within that. As long as people understand that, they could use a digital wallet no different than they could use a physical wallet, which you have to hold on to and defend and make sure you don't lose between the couch anyways. So it's very similar to a digital wallet. So if you can do that, and you understand this digital wallet that exists online, that's where my money is being held, like a bank account, but instead of a password, you might have a phrase. And instead of the bank holding it, it is yours entirely. It's your responsibility. It's in your custody. That's the uniqueness of it. But that's where your money lives. That's where your assets live, or pictures or NFTs, whatever you want. That's what's sitting within that. And so if you're prompted to invest in an opportunity and it says this is 1,000 USDC, US dollar stablecoin, then I would check my digital wallet the same way I would check my bank or my physical wallet, see if that money is in there, and complete that. But what's interesting is that once you execute, the finality is final. Once you execute, it's irreversible. Now, this is what's interesting, and this is what the industry is trying to work out. It's certainly one of the kinks, is that if you don't have intermediaries along the way, and you suddenly feel like reversing a transaction, well, traditionally you could do that. In a ledger that settles instantly, the execution is immediate and final. So that's the only difference, but ultimately it's the same way. Look at an opportunity.
Yeah, no, I understand that, but I think what I'm interested in is, I'm buying something for 20 million. I've got a couple of million in stable coins, just say against the dollar, and but I want to raise several million. And I want to raise it by a DeFi.
Sure.
How do I do that?
Yeah, it's based on the platform. Right. You'd go to a platform and say, I want to raise capital. And they'd say, what are you raising capital for? You put together a deal, and then people commit that capital to you, and it shows up in your wallet. It's quite straightforward. So whether it's you sending the money or you receiving the money, it's very similar. It's a media transaction in that capacity, but it's very platform dependent. It's however someone designs that process. If they say, Gary, you need to put together all your details and put a picture of your property up, and then someone will invest into it. It doesn't matter if it's an ACH or a wire or Swift or crypto. Someone inspects that, they say, this seems like a good idea. They hit the invest button, maybe sign some paperwork, and then the money appears in your bank or it appears in a crypto wallet. So it's very similar in that way, with some nuance around how quickly it arrives, if it can be reversed, and if there are any fees extracted along the way.
Are you facilitating that on your platform? I saw tokenization and, obviously talk of digital, transactions on your website. Is that something you're looking to facilitate or do facilitate?
Not the payments and not collecting capital. We see our role as everything that precedes that. Now, we could get into that. We could be more vertically integrated and include the facilitation of capital, but it's a regulatory mess, quite frankly. Even though you're working in a digital realm, it's still very regulated. Who can invest, what their background is, how that money arrives, if you need a custodian that holds on to the crypto or USDC before it arrives in the account. So escrow actually would be the better term. So there's still that along the way, which means that it's complex, it can be costly, and we don't necessarily want to get involved in that. And there's a lot of solutions out there already. The gap that we identified that is missing is all the data infrastructure so that people can make informed decisions about that, to not incur excess risk, to not be defrauded. And then also, if they are now holding equity of a project in their wallets and they want to see the true value of that at a given moment, can they actually, can that be correlated to the underlying asset so that it does better this month? I see that reflected in my wallets in real time in my holdings. That's what has not really been solved, because again, digital world versus very, very tangible asset class, that's a big bridge to build, but it's not impossible.
No one's done it yet.
People have attempted. They've worked on it. There's been solutions that are episodic, so maybe information gets updated once a year. But again, that's not good enough. Not for the demands of modern markets. There's some companies that have worked on private credit, or people are tokenizing equities. So they will just take the equity price at a given second and correlate that to a token, which is kind of redundant in my opinion. So there's efforts, but not that we've seen solving this very, very critical issue.
You talked earlier and you mentioned that you made the term digital real estate. So there's real estate that we know, the portfolios, the properties we see in every country. But there is also digital real estate, isn't there? That actually doesn't physically exist.
There is, but I have nothing to do with digital real estate. I see it as the digitization of real estate. Right. Now, what I will build upon is that there's a concept called a digital twin, which is that I could be looking at a property on my computer and all the data about it, and even own it, have a virtual equity or stock certificate in that. And it looks like the property. I never have to see the property physically, but it's a one-to-one. So every wire, every screw, everything about that property has been visualized and built out on a computer. That's the only digital real estate that I'm interested in. When I say digital real estate, I'm referring to it as a market where traditionally you meet people in person, you go to their property, you shake their hands, you sign with a wet signature, and now you have a deal. You take that agreement home, put it in your filing cabinet. That's very physical. The market itself is digitizing, where we might view the property. It's a real property, but we might view it digitally, explore it, understand it, do the diligence, meet with people virtually, sign on virtual PDFs, and then rather than having some sort of paper certificate, we have a dashboard that shows us the performance in real time. So instead of saying I own 10% of this, which could be worth $1 million, maybe, we'll check back in a couple of years, I own 10% of this and it's worth $1,000,001, at this day, at this given second. So it's just this idea of digitization, because we know that computers are superior for communicating information and value, right? Millions, trillions, quadrillions of bits every single second. It just makes sense that we would do that.
No, it makes sense. So your data service, etc. I mean, can that be used? Obviously, it can be used commercially, but what about residential? Do people use it residentially? Because I can see a big use for it.
For commercialized residential, certainly, not for individual houses. And the reason why we have avoided that. Now, you could roll it out in theory, like a very simplified version. But what's challenging about it is that you are creating an obligation for the homeowner to upload information, to have it credentialed so that it can be trusted. Because if I'm a homeowner and I just give you documents without any context or without any proof or authority, then you still have to do diligence. So to create that obligation to upload, to credential, to hold on to, and then to hand over, most people are not going to invest time or money or even knowledge into that. The reason why it works in commercial is, one, rather than like a 30-year mortgage, it's very cyclical. It might be 3 to 5 years that people are operating on. It's also very standardized and systematic. You hire people, they accomplish a responsibility, or they do a responsibility, and you scale it up from there. If something goes wrong, there's contracts, there's litigation, there's protocols. Homeowners, you do whatever you want with your house. And then there's a lot more money at stake as well. When we're talking about a real operation with a lot of moving parts and it's worth $10 million and there's a huge bank loan, or we're trying to raise capital, it's just a different animal overall compared to the traditional home.
The thing that crossed my mind was not homeowners doing it. I was thinking about real estate agents when they go to sell something. If they could pre-package it using the data that you've got access to, obviously, I mean, the valuation, the value of those properties would actually be a lot clearer than just relying on an appraiser.
In theory, yes. I would agree. In fact, I was just talking to some real estate agents for commercial, albeit, but at an event yesterday, and I said exactly what you just said. What if it all arrived prepackaged with a bow on top? Wouldn't that make your life easier? And they said, definitely. We spend so much time leading up to a deal, trying to collect what we know about the property, find the receipts, prepare everything. The thing is, will the homeowner be successful at that responsibility? Will they be able to collect all the documents, put them in a secure place? If work is being done on the property, are they actually going to record that properly? See, the difference is that homeowners have autonomy. I could see this working in like a rental or residential REIT, but if a homeowner changes his or her deck, and it's not used by no subcontractor is used, and you don't actually know if it's compliant with code, then and they're not going to report on that. They don't have any obligation to, versus any work being done on a commercial facility is going to have another party involved, and then there's a contractual relationship which guides the whole thing.
Yeah, it makes sense. I think it's very exciting. I mean, I love all this, what's going on in the world, and obviously I'm involved in AI myself, but tokenization, DeFi, I'm a big believer in it. I don't like crypto. I think it's been ruined by the scammers and the people who are trying to get rich quick and using other people's weaknesses and lack of understanding to get there. Bitcoin, I agree with you, but I think the DeFi space and tokenization, Web3, etc. I think I agree with it. How do you see, the future of real estate 5 to 10 years from here? I mean, things are really speeding up now. I mean, if we just talk about AI and the learning curve that's needed, you can't keep up with the actual the progress. It's every day something new happens, something new to learn. It's going to be the same in what you're doing. I mean, how do you see the future 5 to 10 years? I mean, that's a long time.
I think I could only confidently give you a 3-year projection because 5 years, 10 years, as you've seen, things are moving at a exponential rate. This is a hockey stick curve, as they would say. Whoop, it's going up. What we can see in the immediate future is that a lot of tasks are going to become agentic or more programmable, which is interesting. DeFi is sometimes called programmable finance. So it moves based off of preset terms. If X, then Y. But as you introduce agents that have autonomy of sorts, and they start to detect maybe a component in the property is wearing down, and it just automatically orders the servicing of that and a replacement. It checks the budget, see if this makes sense, and then executes on that, and someone shows up to the job and replaces that before it fails, before you need immediate or human intervention, or maybe they just have sign-off. That's where properties are moving, where the physical property itself becomes programmable in a sense, where rather than having people who have constant oversight with enough technology woven into the property and agentic software that's operating on top of that and looking for things that might be going wrong, or if a floor is vacant and we're heating it and lighting it up anyways, could we optimize that? So tasks that humans would traditionally do, but it usually creates some sort of administrative burden because they have to constantly be on the lookout for that, or if you have to hire a bunch of people. And what this is going to enable really is scale. So if a real estate developer traditionally had a team of 5 and they were managing 5 properties, that might work. You go to the property, you make sure that everything is doing okay, take care of your tenants, call for maintenance, do the numbers. To do 25 properties, you would send the same individuals to 5 times more properties, right? You'd be handling 5 times more tenants. That's very demanding. So with artificial intelligence or agentic AI, where you could delegate those tasks to the technology rather than asking someone to work 5 times more, 5 times harder, that means that smaller teams can take on more work without needing the capital to hire 5 times more people. What will be interesting is how this affects the labor market, because it's not necessarily that it's going to replace jobs immediately. Like you're not going to take people off payroll to put AI on, but what jobs will not be fulfilled in the future by people because AI took that place. So it's going to be interesting for the emerging workforce to see how do they adapt to that. But I think that a hybrid model is going to be most effective, where people who are getting into real estate or any industry for that matter will perform. They're going to operate alongside real estate and act as almost an immediate senior role. If the AI is the junior role, it's doing the pencil pushing and the paperwork, the entry level stuff, just making sure everything's doing okay. The new workforce will be able to actually immediately jump to a more senior role, where traditionally they wouldn't have the knowledge to do that, but now AI has the knowledge, so they borrow some of that knowledge, and then they're just overlooking, performing governance, making sure everything is going well, and performing quality assurance in that way. And for folks who don't want to learn AI, they will not have I don't know how they'll have a place.
It's going to change the face of education, everything, because even appraisers, everybody that is involved in all sorts of different business. From the point of a fund manager using AI, you can do your equations within seconds. Even now, you can do, valuations on companies coming to IPO, private equity deals. You can look at finance deals. You can look at property deals. And there's an AI system and tool out there that will help you evaluate it quicker than you could have ever done it before. So in 2 to 3 years, 4 years, I just can't even think how different it's going to be. But you're right, the people that will be in these roles will be people that have trained and understood how they can apply artificial intelligence.
Right. I heard an analogy that a lot of people are going to become essentially managers of AI. So the question will not be, can you do the same task as an AI or better? Because the computer operates 24/7. It just has substantial operating power, thinking power, if you will. However, coordinating all of the different AI tools and making sure that they are doing their jobs correctly, that's going to require a unique individual who can oversee that. And again, offer quality assurance, and then have the knowledge and the context to know when the AI is wrong and say, this is out of line, this is out of order. We need to fix this. We need to improve the inputs or the outputs, or just manage it better, whatever it might be. So the manager of AI is going to be a unique new role that emerges. So for folks who are entering the workforce, that's what their responsibilities might be. Instead of just doing entry-level stuff, learning the basics and whatnot, they will usurp a more senior role and start managing different AI tools. And I think they're still going to have the opportunity to acquire knowledge and wisdom like they would if they were junior level and acting as a sort of apprentice, but the AI is going to be feeding that. It's very abstract to think about because we're not quite there yet. But
you become an engine driver. We put together systems.
Yes.
We put together systems. I use technicians to help me, and then we have to manage the system. It's just like that. It's going to get bigger and bigger. You've got to understand the system to make it work well. I mean, but at the same time, it educates you. So the people that will do those roles will get further education via it.
Mm-hmm.
I mean, it's
That's
exciting.
what I think. Mm-hmm.
If you could change one thing about the structure of business you're in today and the market, real estate market, what would it be?
That's an interesting question. Structure of the real estate industry and markets. Well, I think that a lot of tools and companies exist to extract value from this market. Everyone wants to reach their hand into the pot and grab their fair share. And this makes real estate it's an industry and market full of arbitrage and extortion is not the right word, but people trying to capitalize on someone else's disadvantage. And we're talking about the built environment here. Like, these are people's homes. This is where we work. These are parks or schools or hospitals or infrastructure in general. And so for this to be on a model where it's always, can we make the most money, do the least work, get away with asymmetry, have opacity, I'm not a fan of that. People are really trying to excavate all of the wealth or opportunity in real estate and just pocket. Try to get their fair share before the whole thing falls apart. They're looting the industry, and it doesn't work. It has disastrous outcomes. So when people neglect their responsibilities, they build poorly, and structures fall apart, and people die. That's a real example of, can we make a lot of money, sell this property, and not do the work required, or skip over the details, neglect our responsibility, neglect honesty, be dishonest. That's what this industry is built off of, dishonesty. And so
data is going to change that, isn't it?
In large part, but it has to be done right, because if you just create a surplus of data, then it's a bunch of noise. So there still has to be signal here, and then there has to be trust. If I overwhelm you with data and AI and analytics and say this is a perfect deal, and you're like, well, there's too much going on for me to actually inspect this, and then your AI reads it and the AI says this looks fantastic, but it's not, and the trust is not embedded there, then we've just created an even more exaggerated version of the same industry and market, which is kind of where we're getting to. And going back to tokenization, that's what we saw with early projects. People said, let's take real estate, which is already problematic, and tokenize it, sell it to retail investors, try to get liquidity. Let's scale this up. Let's do 100 times more activity. And guess what? Those deals blew up. People took substantial losses. So in order for things to move fast, you need a really strong foundation. So if I were to take it back to the beginning, I'd say we need a stronger digital foundation for this industry, one of data and trust, and set the record straight that we can operate on transparency. and that you are rewarded for doing the right thing. And too many times in this industry, it's expensive to do the right thing. We need to fix that.
Fantastic. One other thing just before you go. What should investors and operators be paying attention to right now?
The data and trust substrate. Everyone wants intelligence. They want to participate in markets, but those are layers above data and trust. So just starting with data. We're entering the modern era. We are in it, right? 21st century. It's here. We have artificial intelligence. That's exciting. Do you have a plan to actually participate in that? Do you have a plan to transform your paperwork, your processes, to onboard your people online and make sure that they are digitally literate? Do you have that in place? That's where you have to start. Don't just jump to the tools. So understand the purpose of why you're doing all this, the people who are going to have to carry it out, the processes that you will have, and then you can move on to platform. What new platforms will help you manage properties remotely or make AI decisions? What platforms will help you raise capital? Then you can look at that, and then you can participate in broader markets and have all the benefits. But you have to put in the work and build a really strong foundation. Good data, trust, substrate first.
Yeah, no, I agree. Well, Matthew, I'm really glad we have this podcast. It's been very, very informative. I learned a lot from people, but I love all this because it's for future. It's going on now. It's changing lives. And I don't think people realise just how much it's going to change everybody's life. People talk about AI and tools. It's not about the AI and tools, it's the systems it can create. And obviously, what that end result is. Right. I think what you're doing is amazing. It's not about just adding more tools, it's about bringing trust and structure into the asset itself.
Right.
And I think it's what the market needs, and I think it has to happen. And I think you got a heads up on it. So, thanks for being on the show. I want to thank everybody for listening in. I'm Gary Wayne from A1 Solutions. We'll be back with another Wise Tech and Wise Money episode in a couple of days. But before we go, Matthew, could you tell us where we can see you, find out more information, contact you, learn more about how we can use your platform?
Certainly. For more information about building, you can go to www.building.inc, INC as in incorporated. You can also find me on LinkedIn. I'm very active there. I'm under the name Matthew A. Schneider with my middle initial. We also have our own podcast, Code and Concrete, where we talk about prop tech specifically, so things that are going on there, robotics or tokenization, digital twins, very exciting conversations. So I'm very involved in the whole conversation. I think you could find everything from our website and my LinkedIn if you wanted to go down the rabbit hole.
Okay, thank you very much.
Thank you.
I'll talk to you in a minute. Thank you everybody for listening in. As I say, we'll be back in a couple of days with another episode. Thanks, Matthew.